And and the meeting is being recorded. So if anybody needs to view the recording, just let myself or Betsy know, and we can take care of that for you. So Terry Timmons, why don't you go ahead and take it away and tell us about FYIsoft.
Okay, thanks, Rick. Again, everybody, this is Terry, and thanks everyone for joining and taking the time to be with us today. And I'm just going to go through a couple slides, tell you a little bit intro to FYIsoft, and tell you a little bit about our financial report writer solution, Report FYI, as it's called, and get through it as quick as I can for you so that Jason can get into the demo of the solution for you. So I know that's what you really want to see. So, there was a quick agenda there, but first, talk about our partner and your value-added reseller and trusted advisor, Martin Associates. They work with Microsoft, Sage, and Acumatica solutions, and we work with all those as well. And they're going to take care of it as well as we will if you move forward with us. So, and then a little bit about FYIsoft. We've been around since 2012, and you can see some of representative clients on the right-hand side there. And we have both cloud and on-premise solutions, which we'll talk about, and also we have 8,500 users across all industries. And the main reasons our clients choose FYIsoft, you can see the bullet points down on the left there, is to simplify report creation. And we have a powerful automated report distribution feature, so if you have many users need to see the reports and get them out quickly and automatically to those users. And we empower the users to drill down on the financial statements so they can answer the questions during financial reviews very quickly. And if you have multiple companies, multiple entities, much easier multi-company consolidation with FYIsoft. And the bottom line is you're going to have much faster close at the end of the month. And we work with 18 general ledgers, and we're adding new connectors to new general ledgers all the time. We work with, as Martin Associates does, Acumatica, Sage, and Microsoft Dynamics, GP and SL. And you can see that we have other solutions there that we work with as well. And we also work with multiple GLs at a time. So if you have a company now that, for example, is using Sage, and you acquire another company using Dynamics, then we can work with you, integrate with you. And if Martin Associates will migrate you from one solution to the next, we can also be there for you so that you don't have to change financial report writers when you change GLs. And solution at a glance. So we provide financial reporting. So it's really board-ready financial reports. We talk about the automated report distribution before that. And we provide management reporting. Again, board-ready reports. Again, powerful financial consolidation features. And also consolidating multiple divisions and departments along with that very quickly. And you'll see as Jason goes through the demo, the building blocks, as we call them, of how to build the reports, the reporting components. And you'll see the architecture is very easy to use, and it's going to be a lot easier than using some other system where you have to basically develop your financial reports from scratch and basically almost learning code. It's very easy to build using the building blocks, build the reports. And Jason will demo that for you. And now Jason's going to give the demo of FYIsoft and our solution, which is Report FYI. So take it away, Jason.
All right, Terry, thanks a lot. Appreciate that. I just want to clarify something that you said on a previous slide with the different general ledgers we connect to. Because I don't think it was, I know what you're saying, but I don't know if it came across like clear. So what Terry was saying, if you're on a general ledger now, like Sage, let's say, and you acquire another business that's on Great Plains or I mean, if you're on GP or Acumatica or any of the other connectors that we integrate with or GLs that we integrate with, then we can combine your financials in our report writer. So what that does is it means you wouldn't have to combine your general ledgers or merge them into one. You could leave them on their own general ledger, but you could combine your financials in the report writer. And it's very simple to do. I mean, most of it's just mapping on a back end, but the front end, the report writer, looks the same no matter which general ledger you have. I wanted to just clarify that a little bit. Hopefully that helps a little bit. So normally I start off my demos, I show this image and I ask, has anybody seen this movie? And usually the answer is yes, or most people have at least heard of it. Obviously a big franchise, but the reason this image kind of resonates with me personally is, my background is I spent 5 years at PwC as a consultant where I helped restructure companies and turn them around, but I spent 6 years as an FP&A manager, 2 different companies in Atlanta. And I like, even if you haven't seen the movie, the title is what's important here, The Fast and the Furious. So that reminds me of month-end close, right? The beginning of the first week of the month, every month was just that, right? Fast and furious. And so it kind of just reminds me of that. And the other reason it's important is that as I go through the software, everything we did, or everything we've designed in our solution is designed to make your period close faster, but hopefully a little less furious, because it gives you insight into your numbers. It's very simple to drill down. You can run reports very quickly. And so when you're posting entries to your GL, right, and you just want to make sure that they're affecting the statements the way you intended, then very simple and very quick to run reports and do drill downs. And so that's the idea behind why I showed the image of the title there. So Jason, how do you make the close faster? And these are the kind of the roadmap or what I'll walk through in the software. But report generation is very simple. I'll show you that. There's a scheduler built in, which may have value for some companies. The drill down is very intuitive and very simple. There's nothing complicated about it. The automated distribution, depending on how complex your company structure is, this is a huge value add and a big time saver, because we'll distribute reports to every division, every department, every location, all at one time with one click of a button. So it's a huge time saver. Formatting, account collections, data integrity, and audit. I grouped all those into one little category because it's all about speed, and we'll go through each of these things in the software. But we built the formatting into the software. So here at FYIsoft, we believe that reporting should be a button push. We don't like the idea of download a report into Excel and then massage it so it looks good. We want it to look good the minute that you run the report. So all the formatting is built into the software. So when you do run your report, it's going to look right. It's going to be board ready, as soon as it comes off the printer. And then ROI is just obviously ROI. So after all that, let's jump. This is the software. So whether Martin Associates can help you decide whether you want to deploy on-prem or in the cloud. We don't care either way. It's whatever's best for the client. Our software works the same either way, so it's the exact same look and feel. What I'm about to go through is exactly the same whether you deploy cloud or on-premise, which just means on your server in your office, right? So you'll always log in through a web browser. So any web-enabled device, you can get to your financial statements on your iPhone, your tablet, whatever, laptop, any computer with a browser, you're going to be able to get into it. So this is our login screen. I'll log on now.
Hey, Jason, I just wanted to also mention if folks have questions, to go ahead and use the chat feature as part of the Zoom conferencing, and then we'll go ahead and wait till the end to answer those and then open up the lines for everybody to answer questions. So forgot to mention that earlier. Thanks.
Yeah, perfect.
Go ahead, Jason. Yep.
All right. So first thing I'll do is run a report. Everybody's familiar with reports, right? So I'm going to do an income statement, just a simple actual versus budget. And this is the landing page, the first page you come to when you want to run a report and report FYI. So Terry talked about in the PowerPoint the reporting or components. So our software is what we call a component-based architecture. And all that means is that for any report and Report FYI to run, it needs 3 components. It needs a row definition, because it wants to know what rows do you want to display on your report. A column definition, so tell me what columns how you want your columns to look. And then an organization definition, which is really just your company structure, basically. That's what that is. So just think of organization. So the reason they talk about Lego building blocks or their the sales guys like the Lego building blocks idea, because these are all interchangeable, right? So if I click my drop down, I have about 25 or 30 different row definitions built, and I could select any one of these I would like. You know what I mean? When you set these and hit save, right? These will be default in this report, but you could change any component in the report and hit save as, and you instantly have a new report. So what happens is when you first deploy the software, you write the definitions, and we do that with you and for you. But they're plug and play. Like you can change them out. So you can see I have just as many column definitions as I do row definitions. And so once you have those built, there's a lot of leverage, because then you can reuse them on new reports or different reports. So if the CFO comes along and says, like ad hoc reporting, right? You might have to use the same exact columns, but maybe a different set of rows, or maybe even a different organization, or just a piece of the organization. In my experience, ad hoc is really just slicing or breaking up one piece of something to analyze, right? And so our components allow you to do that very quickly. So that's that. Headers and footers are built in here, so whatever whatever your company name is, the best co, and your headers are done. And so it'll print like this on all your sheets and the reports. I'll show you that in just a second. So anyways, this is one area where I was talking about we built the formatting right in, so you don't have to massage it after you run a report. So we'll hit submit request. That's how you kick a report off. This is saying, do I want to, basically, because I made changes here, it's asking me if I wanted to save those changes, and I don't. So I'm going to go ahead and say, yeah, go ahead and leave. But so almost like Excel, when you try to close without saving, the software will do the same thing. It'll say, you sure you want to leave this page without saving your changes? So what happens when you hit submit request is basically it's almost like a wizard. Okay, so it's like 5-screen wizard that'll come up, and it's how you decide, or you tell it all the inputs for the report you want to run. So the first screen is what we call a date picker. I have to go back to 16 because that's where my demo date is. So I'm just going to go year end 2016. Okay, and I'm going to hit next. So this screen is our distribution screen. So there's a checkbox right here that says use distribution from organization. And when we get further into the software, I'll show you how we build organization structures, and we attach distribution lists to the organization. So all the right people, you put the people in a distribution list for each different division or location, basically however your company structure is set up. So this distribution screen is asking, do I want to go ahead and distribute to everybody? So this defaults to not being checked. This was to make the accountants happy. So when you are booking your entries and you're running reports just to verify that it's having the effect on the statements that you want, you're not letting everybody in the company know that their reports are ready to view. But when you're done, day 3, day 4, day 5, whenever you're done and ready for everybody to review this stuff, you go ahead and you check the use distribution from organization. And that's the automated distribution function. It saves you a ton of time. Okay, so when you check that box, you can also notify the users by email. So when we check the notify users, it'll give us a subject line and then this will be the body of the email. So I, by default, put a link into the system. You'll be able to attach the report results in multiple different formats. So for executives, I usually send them PDF. If I'm sending to like an analyst who's going to do further work maybe, then you have the option to do Excel with formulas, so they don't have to rewrite anything. And then if you choose just Excel, it's going to be Excel, but it's going to be all hard codes, right? So I'll just leave Excel for now. But for me personally, if it was my department and I was sending my department managers, I wouldn't attach any results. I would just give them a link, because in the body of their email, this link will be live, and they can click that link. It'll take them into their authentication page, their login page. They log in, and the report will be there for them. And then they can use the drill down feature, which we're going to go through in a minute. But for me, one of the biggest kind of, as a power user of the software, I love the drill down, the ability to get answers to my questions very quickly. And I want to empower the users that I'm sending reports to get answers to their questions quickly, instead of calling accounting and finance and trying to figure out answers to their questions. With the drill down, 9 times out of 10, they answer their own question, right? So they're not interrupting finance and accounting activities. So that's enough on that. So if I hit next, this is the scheduler screen I talked about. So if you have a report that you run, let's say monthly or weekly, like I used to support 26 sales guys, and they lived and died by the daily sales report. So did the executives. So every morning, one of the analysts had to be in the office early to update the daily sales report. Well, if I had FYIsoft and this report writer, I could just say run multiple times. My frequency will pop up. So you can see here I have daily, weekly, or monthly, and I could go daily at 5 a.m., run the report. And so what will happen, the system would just kick that report off 5 o'clock every weekday, and it would end up, and then it would get distributed to the distribution list and it'd be in their inbox. So they wouldn't be, the sales guys and the executives wouldn't be waiting on someone from finance to get the reports to them. So that has value for some companies. It's more value for like a sales or operational type report. I don't know anybody that schedules their monthly financials to run, because it changes every month, a little bit different when you're done and ready to run your reports. So it has value for some companies and not value for others, but it is very simple to set up. At a minimum, it's really, really easy to set up. So we hit next, and all this is like a confirmation screen. It's saying, Jason, these are all things that you picked. And we hit submit, and now we're off to the races. So a status screen will pop up here. If I hit refresh, it'll tell you. So it says it's processing. This is the server it's running on, and it's 8 of 19 processes. So it's like halfway done, and now it's done. So it's fast. A P&L usually runs in about 10 seconds, and a balance sheet might take more like 20 seconds. It's very fast. You're not going to be waiting minutes or hours for reports. So some clients we have came from other systems. I won't name names. Where they would take 30 minutes or an hour to run a report. We don't have. Our software is very efficient. It's pretty optimized, and it runs very quickly. So no more waiting a half hour for reports, because that's fairly crazy, right? So this particular company, I'm going to hit this expand all button here so you can see my tree. So what some people call it a tree, which is perfectly fine. We call it that too. But this is the organization definition. So this particular company I'm going to demo has 3 divisions. They have a retail division, a hotel division, and then holding co. And all holding co is really, it's corporate, right? It's just 2 departments, IT and admin. So it's really corporate, but they broke it out so they can monitor corporate separate, which makes a lot of sense to me. They're smart. Then you'll see under my 2 divisions each have, retail has like 7 departments and hotel has 6. So basically we have departments that roll up to a division, and then the divisions roll up to the consolidated. And remember, so we ran a report for December 16th. So I have actuals, I have budget, and I have a dollar variance and a percent variance. And then I have that for my year to date as well. Okay. And so I'm looking at this report. The analyst and me, obviously there's variances on the revenue, but I'm okay with those because they're all good guys, what I call good guys, right? They're positive variances. So I'm not going to investigate those first. That's just not my style. My style personally is I go right to operating expenses, because I want to know why my SG&A is over. Because in my opinion, SG&A is pretty easy to budget. So I see 280,000 in travel, and I only had a budget of 144, so it's almost 100% variance. So that's driving me crazy. So I'm just going to left click on that, and it'll drill me down to my divisions. So the drill down works. It follows your org tree, right? It goes divisions, then it's going to go down to departments, and then it's going to go down to accounts. And then we're going to even get to account transaction detail. So I'll show that to you here. So it looks like retail division is the driver, the variance. So I'm just another left click, right? So now I'm at my department level. Let's see. So sales, imagine that. Sales is overrunning budget. That's sort of unfair. They didn't have a budget. So any dollar they spent was going to be over, right? But let's just continue on with our theme. So I click again, right? Now I'm at the account level. So right, I have airfare, meals, auto, lodging, entertainment. So they're over budget because there wasn't a budget. So that's sort of unfair, right? But like I said, we'll just continue on investigating what is going on with this variance, right? So I'm going to just choose the largest one, which is 75 grand here. I click again. So now I'm at the transaction level detail. So it was $75,000. It was a journal entry for an incentive award trip to Hawaii, which I find kind of almost, ironic, because they're over budget. So I'm investigating why are they over budget, and they're over budget because they did something to earn their incentive award, which is kind of funny. In my opinion, probably the 75,000 was budgeted at corporate and not at a particular sales department. So as a total company, it probably was budgeted for. But the point being, within a matter of clicks, right, I'm going to go back all levels. So I can go from consolidated, right, to my division, all right, to my department, and then to my account, specifically airfares, to transaction level. And that took me like 6 seconds. So that's the power of the drill down. For me, it's invaluable. Like I said, I was an analyst for a long time, 16 years an analyst. And I love the power of the drill down because I'm just curious by nature. I think most finance and accounting people are. So it allows you to answer questions very, very quickly. It's much faster than doing, let's say, an account analysis on one account from your general ledger. This is just faster, in my opinion. Okay, so that's how we run reports. That's how we do drill down. Let's talk about how do we build these things. Okay, Jason, I get it. You ran a report, it ran very fast. That's fantastic. We can drill down. It looks very easy. That's great. How do I build one of these things? That's a great question. So I told you it was component based, right? We have rows, columns, and organizations. And I'm going to actually start with organizations because it's the most complicated. That's your company structure, right? So let's start there. And I'll go into I'm going to pick the one that we ran. So hopefully it starts to get familiar for you. Let me get some more space here. And I'm going to expand it all again so you can see, saying this is the tree I was using, right? And I'm going to highlight retail. So what happens is the department level is the lowest level of reporting on, yeah? So what we do is we create a mask, and we're using wildcards to tell it, right, it's company 100. I want all accounts, or really I'm going to go to my row definition and grab the account from my row definition. You notice the only thing that's making each of these different departments separate is actually the department code within the accounting key, right? That's the only thing. And then we want to pull all the asterisks these are wildcards, and they're telling it to pull all accounts and all sub-accounts. Okay, so it's very simple to set up your reporting structure. I mean, this takes 20 minutes, if that, just depends on how fast you are, but this is very fast to set up. It's not complicated at all. What's very powerful on this particular page, though, is remember when I ran the report and it asked me, did I want to use distribution from organization? So this is what it means. We're in the organization, and I have the ability to attach a distribution list to every department, right? So these all say retail division, and then you can have multiple distribution lists. You could have anybody that needs the whole retail division is going to get accounting, right, within the retail, and you can add more. So it's retail division. I could add retail sales. I could add a hotel, which would make no sense, but I have the ability to do it. Every distribution list I have built, you can attach to the department. So I'm going to get into, actually, I'm going to go there right now. Let's look at sales, for instance. So just use this as an example. So sales 100, or sales is the 100, right? And we're in retail. So I have a retail sales department distribution list. Okay, so I'm going to go say, wait, now Jason, who's in retail sales department? And this is kind of how we manage security with our software, is through the distribution list. It's very easy to set up a distribution list to know who is going to get that department in that division, right? And let me show you that here. So you'll see my different distribution lists here. Let's go to retail sales. And what will happen is this says available users. So everyone in your company that has a license, doesn't matter which type of license, as long as if they have a license for the software, they'll show up here in this little list. And you can put whoever needs to get retail sales department, you add them to assigned users. So let's say we got Bob, he's getting it now, and Courtney, she's getting it. We could do Grace. I could add Grace. Let's say Grace needs to get it. I could put myself on it. Let's say I need to get it. And I click save. Now these are the users that are going to get the retail sales department P&L or balance sheet if you're going to run a balance sheet report, right? So that is as complex as it gets on managing what people in your organization are going to get what departments, or however your reporting structure is. Maybe it's by location. So you can set up a distribution list for each different location. And so everybody, like I said, every user you have available, you just literally add them or you take them off. Let's say I don't want to add Grace, that's my boss, and she really doesn't want to get all these. She doesn't want to get my demo reports every time I run them, so I'm going to take her off. And so now I know, so Bob and Courtney are part of that retail sales department, and that's who's going to get the reports when I run that report. One thing I want to cover while we're here is packages. Now, I cover it at this point in the demo because it's structured very much like distribution lists. Anyway, let me go back 1 minute. So that automated distribution and having all the departments distributed out to all the department or division managers that need to get their reports, that all happens behind the scenes. The software does it for you. So that's part of how when I say speed up the close or make faster period close, we try to take some of the admin pieces out of the close process. So we don't like the idea of let's run a report, download it to a shared folder, go in my Outlook, type in the names of the people I need to get the report, and then attach a static report to an email and then send it, right? We try to take all that admin piece out. And at the end of the month, it ends up being a huge time saver. And I say that now because I'm going to show you another feature called packages. And it's along the same lines, or the same idea of saving time. So remember I said it's structured very much like distribution lists, meaning every report that you have written in FYIsoft, report FYI, will be here, okay, in this drop-down list. And you can add these reports to a package. So all a package is a grouping of reports. Okay, makes sense, right? A package is a package of reports. And the idea here was, let's say we call this management reporting, this little example, right? So we're going to send to, we have a distribution list, senior level management. And instead of running at the end of the month, the executive is going to get all financials, right? Not just the P&L. So we're going to give them a balance sheet, a cash flow, and a P&L. And instead of running 3 reports and the exec getting 3 emails saying, here's your balance sheet, here's your cash flow, here's your P&L, we're going to run the package. The system's going to kick off all 3 of these reports, and it's going to go to the execs, and they're going to have all of their reports instead of just 1. Okay, so again, the idea there is just to try and save. It's just one little thing to save a little bit more time. I want to talk a little bit about data integrity. I mentioned it in the PowerPoint slide a couple places. If you notice this little orange box here, it says checked out to mass 1. So that means this package, see this little locked icon? That means it's checked out. So I can't edit this. Even though I'm an author, like I have the most powerful license of the 3 license types, I have an author license, which means I can create or edit any report in FYIsoft, unless another user in my organization has that particular package or report or column definition checked out so that no one else can edit it. So that's a feature that many CFOs and controllers like when they get their row definition perfect and they don't want any of their staff to accidentally change something. And then the next month they run their P&L and they're missing an account, or they can't tie out. To prevent that from happening, there's a feature in our software called check in, check out. So when you have it perfect, you check it out. You can leave it checked out indefinitely, and no one else in your company can modify it. So that's one way we ensure data integrity within your reporting. Okay, that's packages. Hopefully that makes sense. I can show you this one. So if it has a check mark, so I said if it has a lock symbol, you can't edit it. If it has a check mark, it means I personally have it checked out, and I'm the only one that can edit it. So the check mark means the green check means I can edit it. And so see there's this button here, check in. I check it in, and anybody could use it. So you don't see the check mark. And then if I go back into it and I check it out, it will be, I'll get my little, my green check mark, which means no one else can use it. The idea here was, so this particular company I created, they had a detailed P&L. They had two different styles of P&L, right? They looked at their P&L two different ways. But rather than having to run, and they had, this particular company has like 300 schools. So instead of, with the click of a button, they run both. They're both different P&Ls, the detailed and then the really detailed, for all 300 locations, literally within 30 seconds. So it's pretty powerful. The more, the more complex your company is, or the larger it gets, the more and more time we can save you guys. One of the companies that don't have a license, don't receive the course. Just think so. So there's a question in the chat box I'm reading. I'll just read it. I said I would save all these for the end, but it's a good time to address this question. So it says, can people within the company that don't have a license still receive the reports through the distribution lists, just an Excel or PDF attachment? The answer to that's no, because if they don't have a license, the system doesn't know how to identify them. So it won't know, it won't have the email address for the person. It basically has an email engine built in, and it needs a user, an email address assigned to a user in order to distribute it. So unfortunately, Brian, the only way you can, if you wanted to do the answer is no. You can't do it unless they have a license. The only way around it is if you run a report to yourself and you include the attachment, like I chose Excel, right? And you attach it, and then the report, it'll be emailed to you or anybody, right, whoever has a license, and then you can then forward that to anybody that needs the report. The downside to that is it's static and there is no drill down. So it just depends if you don't need drill down, it's not of importance to you or to the person you're sending to. I get that. I think most companies, I think there's a lot of value in the drill down and the ability to answer your own questions very, very quickly. So you can email to yourself and then forward, but unless they're a user, the software won't know how to get it to them. Okay, so hopefully that answers the question. So let's go. So we talked about organizations, right? Let's do rows. Okay, so it's the second of the three components that you need to create a report in software, right? And let me go into the one that we used. So like I said, I try to keep this familiar for you. So you can see here's remember we ran the P&L. These are the line items of the P&L we had, right? So this is kind of like your template. You'll see different row types here. There's 5 different row types. I'll come back to assign RV because that's the most complicated one. The rest of them are real simple, right? We have GL, which just stands for general ledger, which means it's going to ask me to go, it's going to basically report writer saying go to the general ledger and pull back these accounts. Description, that's self-explanatory. The description is going to print. If it's a calculation row, you'll see there's anywhere you have a calculation, then you'll see obviously a calculation in the column called calculation, right? That makes sense, right? Underscores are underscores. So pretty self-explanatory. The only one that's not self-explanatory is the assign RV. And what that does, RV stands for row value. And we put that in so that people could write, a lot of companies like to look at, a percent of revenue on their P&L reports. So when they're looking at actuals, you could do a percent of revenue calculation right next to your actuals. And the way we had to create a row type called assign RV so that we could tell the software what row did we want to use as our denominator. So you see here 1 equals 90. So I mean row value 1 is equals to row code 90, and row code 90 is just total revenue. So it's going to divide every single line item on the P&L by this row value 90, which is just total revenue. So that's the assign RV. Hopefully that's not too confusing. So this column is important here, reverse sign. So obviously your income accounts, right? Their credit values and their trial balance. So we want to reverse those when they're on our financial statements. So it's very simple. Any report writer worth its weight should have that feature, in my opinion. This next column here is called style. That's short for presentation style. And again, this comes back to formatting. So you can have as many presentation styles as you like, whatever you need to satisfy your requirements. We find that we really only use kind of two: headings and subtotals, and a total. Well, three. Let's call it three. You have headings, you have subtotals, and you have totals. But this is where we format it within the software, so that when we run the software, it's formatted and pretty and perfect. In the end, I'll go back to the report, and the way it looks on your screen is the exact way it will print out. So it's professional looking, it's board ready. Like I say, it's PwC standards, in my opinion. It's of quality that you could have, pride in, right? It's a very good looking report when you're done. All right, and last thing I want to cover here in rows is, if you see under GL, this is my data source. So it's for product. These are my different line items: product revenue, consulting revenue, service revenue, and other, right? So I'm telling it to go to the general ledger and pull back certain accounts, and then report. Obviously, bring that back on that line item of my report, right? So there's 4 different examples here of how we could bring back a set of accounts, not just one account. So other revenue, 4,900. That's just a single account, right? So that's simple. It's just one account. It's going to make up that line item of your P&L. Service revenue, you'll see here we have 45 star. So that's a wild card. It's saying bring every account that starts with 45. I want all of them on this one line item. So that's what star means. Consulting revenue is 4,300 to 4,400. So that's a range. It's bringing back everything, obviously, from count 4,300 through 4,400. And then product revenue is the same thing. This is a range of accounts, but we defined it and we gave it a name. And so product revenue, right? And we call that an account collection. So it's a collection of accounts. And what happens is, oops, let me go back and I'll show you how to modify this. The reason this is powerful is in case, let's say you have some kind of anomaly at the end of the month where you had to add an account to your chart, right? It was different. It didn't really fit in any line, any account that you had in your chart of accounts, right? So you had to add one in your GL, okay? So if that is the case and you want your report writer to pick it up, this is one way where we make this very quick. So let me go to, it's over here, account collections. I should have said before, this is the navigation panel. Everything you'll ever do inside the software is going to happen right here. I kind of call it like the steering wheel of the software. So if I go into product revenue, notice this product revenue has the lock key. Someone else created that and they locked me out of it. So I create my own. See, this says, these are my initials, JDM at the end. So I go into that. Oh, remember, I made changes and I don't want to save, but it's just asking me if I wanted to leave this page without saving. So product revenue is a range of accounts from 4,100 to 4,200, right? But let's say in this particular instance, we had to add an account to the chart. We were out of accounts from 4,100 to 4,200. We didn't have any left, so we had to add 4,250 to our chart. Well, if we come into the product revenue account collection, we add this 4,250 and we hit save. Now every report in FYIsoft that we used this account collection product revenue, instead of using a range of accounts, we used the name, would have just updated globally. So let's say you had product revenue used on, say, let's say 6 different reports in your monthly reporting package, used product revenue in some way, shape, or form. Instead of changing it on 6 reports, you change it in one place and all 6 reports would update. So that's the idea behind account collections. It's just, it comes back to trying to save time again and making a change sort of globally instead of report by report. You also, you can remove accounts too. So let's say 4,100 to 4,200 is our range for product revenue. But let's say 4,160 used to be product revenue, but we don't use it that way anymore. It needs to be in a sort of, let's say in another line item, say service revenue. Okay, so we still want to bring back everything 4100 to 4200 except for 4160. Then we just select remove. We hit save. And again, now every single report in the software that used product revenue would have been updated for that one change. So again, it's like I say, it's a way to save time and to make global changes instead of just individual changes. Oops, sorry about that. Let's see. So that's rows. It's pretty much everything I wanted to cover in my row diff. Let me go back to it for a second. Yep, that's everything I wanted to cover. Well, calculations are very simple. We try to keep it as close to Excel as possible because everybody knows Excel, right? So if you want to sum, it's just row code 30 : 70. So that's bringing back product revenue through other revenue, right? It's very simple. The formulas are simple. Gross profit, right, is just going to be total revenue minus total costs. Simple, right? So we keep that as simple as possible. And you can do if then else statements. Like, it can't write every, it doesn't have every Excel function in here, otherwise it would just be Excel, right? But you can write some fairly complex formulas in these calculations if you want to, or if you need to satisfy your reporting requirements. Okay, cool. So that's rows. And then the last component, obviously, is columns. We haven't talked about columns yet. And I usually don't spend a lot of time in columns. Columns are sort of boring. They are what they are, right? Actual, budget, variance, percent of revenue. We'll just look at the one that we used, right? So you can tell you have different column types. If I hit edit here, oops, never mind, doesn't matter. You have different column types. So you have period amounts, calculations, there's separator columns. That's about it. You have amounts, separators, and calculations. So simple, right? And a description column, that makes sense, right? Because the description from your row definition, that's where it's going to go in this column. So your first column will always be a description, okay? And so you select period amount and the book code actuals, and then we have the book code budget. So it knows from your GL, like say you had Sage, it would know if it was an actual or a budget based on the code, the book code in your general ledger. And then variances are simple. It's just calculating simple C minus B. So it's taking budget minus actual. And then percent variance is just the dollar over the budget. Yep, pretty simple. And that's really all there is to cover on column. Columns is sort of boring, like I said. But what I do like to show is that, you see I must have 30 of them here. So any creative way you can think of to put your reporting together or make more sense of your financials, you can accomplish it. I mean, it's very, very, what do I want to say, robust from that perspective. I'll show you a multi-entity example. So if you want to do all your divisions across the top and then a total, it's easy. Use these, there's filters and you can tell it what division you want or what department you want. So for instance, we have the 13 departments. We could have all 13 departments across the top and then a total. So if you want to look at a P&L that way, so one page with all departments, you could set it up. I have another one. Yeah, like this company, they had 4 divisions, really 3 divisions and then corporate. So you could set that up. We looked at a simple one, right? Actual versus budget and year to date. Let's look at a little bit more complex one. This is one I did for the schools. So they did very interesting reporting. They had their month actuals. They wanted the previous month actuals to the left of it. They want a percent of revenue on the actuals, percent of revenue on the budget, and then they wanted last year's numbers too. So the same month for last year, and then a percent of revenue. And then they did that, and that's just for the month, right? Then they wanted quarter to date, all the same columns, and year to date, all the same columns. And so this gets, you can get as complicated as you want with it. It's like I said, it's very robust. If you can do it in Excel, you can do it in our report writer. So that's what it covers columns, and I'm almost done. The last thing I wanted to show you is this is one of my I think this is a powerful feature, and it's called our audit feature. Remember, I talked about it in the slide that this is one of it's a time saver. And what audit is, literally, the name is very fitting. I'm going to go to that row definition that we used in the P&L that we've been looking at. So I select that row definition and I hit the audit button. Okay, and here's what it tells me. It says, okay, Jason, in this row definition, you started with account 4100, right? That's revenue. That's the first account. And then 8101 was the last account, like it was the highest number account that you used. And they'll give you a description, interest income, and it tells you it's the last. But what this is telling me, though, is along the way, in between 4100 and 8101, I left out account 6103. So 401k match should have been in payroll and benefits line item, right? But I forgot it, so I missed it. And so the software is telling me that I missed it, right? So instead of me at the end of the month going, man, I can't tie out to my trial balance. Why can I not tie? Why can I not tie? And I'm searching. You know, there's no more searching. The software will do it for you. So what the sort of, I guess technically what the software is doing is comparing every account that was used in the row definition versus every account that's in your chart of accounts, right? Because it's connected to your general ledger, so it knows every account in your chart, and it's telling you, or it's telling me that I missed this one. So I need to go back to my row definition and put 6103 in there, and then that would resolve my issue. I wouldn't have any more issues. In addition to telling you if you missed one, so it says not used, if I had 6103 twice, let's say, or even 3 times, doesn't matter. If I used it more than once, then it'll tell me use twice, use 3 times. And in some cases that may be okay, right? If you're doing if you have add backs to get to EBITDA, right, then you are going to have accounts that are going to be on that row definition twice. And that'll be okay. But when you run your audit and it tells you that, you're like, oh yeah, I know that account is on my row definition twice because I wanted it to be. Where this has the most value, in my opinion, is when you're first writing reports, either when you first install, or if CFO or an executive wants a new report and you go write one, then the audit feature has a lot of power in that it helps you just make sure you didn't miss anything. Another thing that can happen too is, let's say you did add an account to your chart of accounts and you don't tie out, and it wasn't in an account collection and it missed the range, and so the account just isn't on your report, and so you're not tying out, right? The first thing I recommend to all my clients is that if you can't tie out, then you come to the audit feature, you select that row definition, and you run the audit. I mean, you could do this in, what does it take, 30 seconds? You could add it to your monthly kind of checklist, or your month-end close checklist. Is run the audit feature, make sure I'm not missing anything. But obviously, if you're not tying out, then that's like the clue to go audit, right? That's pretty much it, Terry. That's Terry and Rick. That's sort of everything I wanted to cover in the demo. And
Yep.
I think we have plenty of time for questions if any. I answered Brian's, but I don't know if you had any others that popped up.
Yeah, so if anyone, Betsy, maybe if you wanted to see if you could unmute, and so you could either use the chat, or I think we can have you bring up your questions on your phone. I guess maybe I'll start with one, and then
sure,
folks can chime in. So along with the lines of Brian's question, maybe you could describe what the license types are.
Yeah, no, that's a great question. So if you look here, let me go back to develop. In my navigation panel here, you'll see 3 buttons. There's develop, which is where I spend all my time. This is an author license, which is the most powerful of the 3. So an author license is a user can create and edit reports, any and all reports. That's what that license gives you. The request, this tab pops up if you have what we call a publisher license. That's our second type of license, is publisher. What a publisher can run reports and distribute, so it can run and then use the auto distribution. So like some of the larger companies might have, the executives might have an EA, and they have the EA refresh the reports for them. So she can log in and do a request and run a report. and have it distribute out. And then the last license type is the viewer. And that's all viewer is literally view. They log into the system and they can get reports that were ran for them by either a publisher or an author. And they have the drill, all licenses have drill down ability, and that's the value of especially the viewer license, is that you can log in and you can drill down on any line item. So author is the most powerful because they have the ability to do all. They edit, develop, run, and distribute. Publisher can just run and distribute, and then viewer can just view. So those are the 3 different license types.
All right, great. That's a good explanation there.
Okay, good. Hey Terry, you can chime in. You can chime in too if you have any had any questions you think that people might want to know but haven't chimed in yet.
Yeah, I was just going to ask you to clarify the licensing, so thank you for doing that.
Okay, no problem. Got that. And you know, Rick, if any of your customers if they wanted me to do an individual, like one-on-one demo where they can ask me more questions that are specific to their company that they might not be comfortable asking in this format, we're totally fine with that too. That's no problem.
Another one popped up in the chat window.
Yeah, I see one here from Brian. Is it possible to set up a report based off vendors that are GLO? So Brian, it just answer is yes. The short answer is yes. The longer answer is it's basically the report writer is driven by your general ledger. So if you have if your general ledger has if you have vendors in there, or you make vendor part of your accounting key, then we could run reports off that. Basically, think about your accounting key. Any segment in your key, we can report on it, because we can grab just that segment if you want. So you may have, if the vendors are set up in there, either vendors or customers have their own key, or segment of the key, then you can combine that with departments or product line, or any way you can think of reporting. As long as it's it's captured in your general ledger, then we can capture it and report on it. Okay, cool.
All right. Yes, and to follow up with what you were talking about earlier, Jason, about individual demos. So that's obviously, anybody wants to ask more questions. You can contact the person that you work with at Martin & Associates, and we can get that working and all set up. So.
Yep, absolutely. We're available anytime.
Okay.
And what I did, Rick, I said I was going to go back to report at the end of when I was done sort of demoing. So this is if I print this is what this report's going to look like. So it's WYSIWYG. What you see is what you get. So it will print out in this format. It won't print out some funky looking weird format. So we like to call it board ready, because we're pretty our company, the founder of our company she started her career on Wall Street, and they're very financial statement driven, right? Everything is based off financial statements. Mm-hmm. And she wanted quality, good looking, high standard of quality looking reports to come out of our system. So that's what we tried to do. All right, sir?
Great. All right, well, respect everybody's time here. So if there aren't any further questions, I guess we'll go ahead and wrap up. So on our website, we will have the ability for you to either you could request from your representative at Martin Associates, a recording of this, or it'll be out on our website. And as we were saying, just let us know if there's any questions or follow up after we hang up here. So thanks again for everybody attending and your time. We appreciate it. Jason and Terry, good job. Thank you.
Thank you, Rick. Appreciate it.
Thank you.
All right. Yep. All right. Have a good day, everybody.
Thanks. Bye-bye.
Bye-bye. Thanks.